Happy afternoon to all of you. I'm CA Vinay and Sanji, and I'll be the moderator for the session today. Let me begin by extending a warm welcome to all the participants here to our third topic in the webinar series on international taxation hosted by the Direct Taxes Committee of ICAI. The topic for today is recent decisions in international taxation, and I must compliment the Direct Taxes Committee for requesting Sri Narendra Jain to deliberate on this topic, because I can confidently vouch that there are very few speakers who can do justice to a topic of this nature. Before I take upon the privilege of introducing Sri Narendra Jain to the audience here, I would like to acknowledge the presence of our beloved Chairman and Vice Chairman of Direct Taxes Committee, and Sri S.P. Singh Ji, who has been a guiding force for the committee for several years now. Now I wish to just exercise my privilege of introducing Sri Narendra Jain to all our participants here. Sri Narendra Jain is a practicing advocate at Karnataka High Court with a string of academic qualifications as a commerce graduate, a company secretary, a fellow CA, besides, of course, law. He has invested 20 years in this profession by advising clients on income tax, transfer pricing, corporate tax, international taxation, and on GST matters. Besides, he specializes in tax litigation too. His academic and professional accomplishments are a matter of envy for students as well as peers alike. He has secured the 5th rank in CS Inter, besides bagging several awards and accolades for securing the highest marks in CS Final in various subjects like advanced company law, direct taxes, and indirect taxes. He has, to his credit, several books which he has authored or co-authored. Some of his popular books which I would like to mention here are Analysis of Transfer Pricing Judgments, Digital Commerce, an Analysis of Taxation Aspects and Emerging Issues, Permanent Establishment Emerging Trends, New Age Assessments, Penalties, and Appeals. More recently, he has even contributed to updating and release of the 13th edition of Sampath Iyengar's Commentary on Income Tax. Besides being a regular speaker at various conferences, workshops, and academies, he is popular among our CA final students as their preferred faculty for direct taxes, international tax, and transfer pricing too. He makes it a point to give back to the profession by offering his services to various professional bodies like International Fiscal Association, ITAT Bar Association, and Chamber of Tax Consultants, to name a few. Lastly, I wish to conclude by sharing my own personal experience with him by virtue of my association at IFA. He has always been very approachable, humble, and very forthcoming senior and individual, especially whenever I had reached out to him on any professional matters where I was in doubt. Thank you very much, sir, for accepting this invite to be the speaker for today's session. We welcome you. Before I hand over the proceedings to our speaker, I request our beloved Chairman Sri Piyush Ji to deliver his welcome address, which will be followed by our beloved Vice Chairman Sri Kota Srinivas Ji giving us some opening remarks on this subject. Lastly, to help us take the best out of today's session, I request Sri S.P. Singh Ji to give an overview of the session on helping us understand how we should approach judicial decisions and implement it in our practical scenarios. Thank you, sir. Over to you, President, sir.
Thank you very much, Vinay. A very good afternoon to all of you. My Vice Chairman, CA Kota Srinivas Ji from Bangalore, the Speaker for the day, Narendra Kumar Jain Ji, Moderator Vinay Sanji Ji, our stalwart and advisor to our Direct Tax Committee, S.P. Singh Saab, immense experience as an IRS, Secretary, equally technically qualified, Priya Subramaniam Ji, Prachi was there, and other tech team, and all the participants. A very good afternoon and a warm greetings for the festival which are around. This month of April is completely a festival day. Even today, I know it is a holiday, it's a bank holiday. A lot of people may be working from the home or maybe from the office. And on this holiday, I believe it is also an important day wherein you can actually concentrate on your learning experience. So I'm sure you would be attentive for next 2 hours when an important topic, which is recent, most important, most recent judgments on international taxation, which will be deliberated by Narendra Kumar Jain. I'm sure it will be of immense benefit to you. And when you hear Mr. S.P. Singh also giving an overview and importance of judicial precedents, I'm sure you will get further enlightened to it. Vinay, the moderator, thank you very much you also for joining and taking this task and taking up the questions in the last for the benefit of the participants. Coming to our initiatives of international tax basically under direct tax committee, because it's a combined committee since last 1 more year now. We are trying to make a research papers and write research papers on 4 or 5 important topics. We had also invited some expression of interest. We have already received certain interest expressed by certain members. If any members, any participants over here or your friends who would like to contribute to the research activity of an international tax topics, please do write to us on dtc@ici.in. Very shortly, we have already analyzed. We are also trying to close that and finalize. Maybe shortly, we would try to appoint some senior research members who have expertise in research and also certain 2 young members who can help him in finalizing those research papers. There are 4 or 5 topics which have been selected, including royalty and FTS, including how to claim tax credits, foreign tax credits, and etc. So please look into it. And if you are interested, please do write to us. We shall consider soon because we'll be finalizing maybe in this week's time. Coming to other initiatives, as far as international tax is concerned, we generally run a diploma course on international taxation. One such course online is already going on. It started 2 weeks before. I believe there are certain sessions which are already over. And as per the council decision, there is a limit of 200 members for that particular course, which is already full and all the members are attending. This course requires compulsory 75% of attendance. And after the attending those lectures, after listening to faculties, you are required to appear for an examination. Examination for this course is conducted by our exam committee. It's in a similar manner, in a more secured way, as if the C examinations are conducted, and the results are also quite tough. But we have seen the people who have actually cleared these examinations and have been conferred with the diploma title. I'm sure they have benefited in their professional practice also, and therefore we generally receive a lot of requests for the registration, and we are not able to accommodate because of the limit of 200. But whosoever wishes to join, and because the current registration and the current course has already been started, we assure you if the registrations are enough and if the request to come, as soon as we complete this online course, we'll launch another online course. At the same time, if the physical courses are also possible, in cities, in a metro cities, if we have a minimum 40 participants, if in other cities, that is tier 2 cities, if we have a minimum 30 participants, we can also conduct the physical courses. So if anybody feels that they would like to have the physical course in your city, in your branch, wherever you are located, you may write to dtc@ici.in. You may get in touch with our branch, try to get an interest from the members and see if we can get those minimum numbers. If we are able to, we will definitely launch one. I'm sure the international taxation is of quite immense growth area. As we all know, the cross-border transactions is growing very fast. It's not only I know prior international taxation was not been actually looked into it by all small and medium enterprises or maybe the individual proprietors. It was a cup of tea of few chartered accountants practicing who used to specialize in international taxation. But I believe it's not like this now. There's a requirement of issuance of 15 CB by a chartered accountant certifying it for each individual remittance. So even a small businessman, maybe a small individual who wants to remit the funds abroad, he is required to obtain a certificate from a chartered accountant, or at least he is required to take an advice that whether he can go along without a certification, he can just fill in the form 15C and go ahead with it. So each individual chartered accountant, whosoever your client is a small, maybe a small individual or maybe a small entity, he may require your services. And therefore, it becomes very important for small members, small practitioners coming from whichever area to appraise them, to get tuned, to get learned into international tax subjects. That's my request is. So thank you very much once again. My warm welcome and a very good afternoon on this Eid Mubarak Day today. So my best wishes once again to all the members who have participated. Thank you very much. Over to you, Vinay, for taking the proceedings forward. Thank you.
Thank you, Chairman, sir, for giving us the overview of the activities of the Direct Tax Committee. May I now request our Vice Chairman, Kota Srinivas ji, to please give us his opening remarks.
Yeah. Good afternoon. Thank you, Vinay. Let me welcome Narendra Kumar Jain, the Speaker for the day. SP Jain sir, who is associated with TTC from several years, is the guiding force for this particular committee. We have the Chairman of DTC, Piyush Chajat, and the Secretary of the DTC Committee, Priya, and other staff members, Prachi and others. First of all, let me welcome to this particular seminar on international taxation. I thank my good friend Narendra and also Vinay for being associated for this particular session as speakers and moderators as such. As was already explained by the chairman regarding the importance of international taxation, of course, next there will be Chartered sir who will take us through the overview of this particular thing. So I don't want to spend time on this international tax matter because the speaker is there who will take us through some of the latest judicial decisions. Only one thing I'd like to say is just as the chairman already said, this international taxation is also part of our practices, day-to-day practices, because we come across so many cases where there is international transactions. So it's not that if you assume that we are doing only the traditional practices or local practices, that we should not know something about international taxation. Every practicing CA or every person who is in the industry would come across some of the transactions which is linked with outside India, that is international transactions. So everyone has to know this. And from DTC, we are planning to have one session on income tax and one session on in the international taxation. Every Thursday, we'll be having this webinar. And now we are just planning to cover almost all the articles. Like we will start with the DTAS article so that in basics you can also understand the international tax law perspective. So that is our endeavor to see that whatever best possible in this next 8 to 10 months, we will cover as much as possible the international taxation concepts and also the direct tax concepts as such. Coming to other area, like I'm the convener of M&SS Directorate. So as all of you are aware, this KYM requirements is there for every year that you have to update your KYM, which you already done in the last year. So now the process of making KYM approved is very simplified. If whatever the data that you have given in the last year, the same data is there. So within a short period of maybe less than a minute, if all the data is proper, you can just press yes and submit. Your KYM will be completed for 24-25, and at the same time you will be eligible to pay the membership fees after completing your KYM. So this year you cannot pay the fees as of now without completing your KYM. So I request all of you to complete your KYM formalities, requirements, and then pay the fees at the earliest. So once again, I welcome all of you for this particular session. I hope by end of the day, you will have more knowledge on international taxation. Thank you, and over to Vinay.
Thank you very much, Vice Chairman, sir. I should acknowledge that the KYM process has definitely been simplified to a great extent. Thank you for that initiative. May I now request our SP Singh, sir, to please give us an overview of today's session, and so that we are able to take away the discussion in a better manner. Thank you.
Thank you, Vinay. Good afternoon, friends, and welcome to this webinar on a very important and interesting subject, that is the recent judicial decision in international taxation. I would like to thank ICI, particularly the chairman and the vice chairman, for providing a platform for exchange of knowledge, which will help the members, the young members, to move up in the ladder of learning, go up in the learning curve. A special thanks to Priya and the team of the Direct Taxes Committee for ensuring a smooth webcast. I will fail in my duty if I don't thank Narendra ji because I have heard him several times, and I am one of the fans. He is very thorough. He goes through the subject in a very elaborate manner, brings out even the minor points which can be very important in any judicial decisions. And a special thanks to Vinay for introducing the members. Friends, all decisions are educative. Some of them make the law. They are not only which expound, which explain the legal provisions in the Income Tax Act or any other legal provision which is required in the context of a particular case, but many of them are really nice piece of literature to read. You must be wondering at the wisdom of the judges, how they are able to comprehend very complex matters coming to them in a large number in any single day. You may be also wondering how and which manner the representatives on the both sides prepare their subject, because it's something nice to hear. I mean, whether you attend a hearing in the tribunal, or you go to High Court or the Supreme Court, the level of arguments which are put by their counsels and the decision which come out from there is something which is to be learned. So far as my uh, I will take on the judicial importance of the judicial decisions. I will narrate a very small story. In fact, my education and my initial training in the tax department was such that I was totally hooked on to the facts of the case, whether in the investigation division or in the central circle, where it is the fact which dominated. And it was not the case law which dominated the decision. So the case law was always in the background and the facts were always in the foreground. This underwent a very remarkable change when I appeared or went to assist the counsel in the tribunal, and the opponent was the well-known, Sri Palkiwala. His name, I have heard, and everybody at that point of time and even now have heard. I was really curious how he represents a case. And when he came, he was carrying only one single piece of paper. And in that single piece of paper, there were bullet points for facts and the bullet points for the cases he was going to rely upon. And he narrated on the basis of those bullet points. That impressed. It still impresses me equally as it did around 30 years back. And I tried to take help of that approach when I became representative of the taxpayer before the tribunal. But I got a rude shock. In one of the cases, I prepared the similar line. I put the facts and I then put the cases on which I was relying. So I stood up and then I started arguing, give the facts and say that I rely upon case law so and so. That was a case of transfer pricing. So I was trying to say that a particular comparable should be rejected or should be accepted. The learning which I got in that hearing was when the judicial member said, tell me why I should accept your argument. What are the facts of the case on which you are relying? And what argument was taken in that case? And are they similar to your case? Now, I was not prepared for that. I thought that only giving the name of the cases would be sufficient. That was a big shock to me and a big learning to me. Over the time, I adopted that. I tried to perfect that. Now, what are the things which I did and what my suggestion to you? It's not the best, maybe may not be the best, or may not be the only approach. But this will give you food for thought how you should prepare when you go to a tax administration, prepare your submission to assessing officer, to DRP, or to commissioner appeal, to the tribunal, High Court, Supreme Court, anywhere. And when you try to use or when you try to rely upon a particular decision in a particular case, the first thing you must do is to get the mastery of your facts of your case. You must try to talk to the CFO or CEO or what whosoever is well versed about the facts of your client. Take that, read the decision which you are going to use, go through the facts. Never ever depend only on the summary which is given in the beginning of any published decision. That's a trap which you must always avoid. Go through the facts of the case, and then when you are reading a decision, try to find out which facts have led to a particular decision. And that applies even when you are reading an unfavorable decision. Because rest assured, if you are trying to come up with a list of 10 favorable decisions, the other party may come up with 15 decisions in their favor. So never ever avoid reading unfavorable decisions. Prepare the same way, whether it is favorable decision or unfavorable decision. Go through the facts. For favorable decision, try to bring out how it is similar to the facts in your case. So far as unfavorable decisions are concerned, try to show how the facts in the unfavorable decision are not same as the facts in your case. And if in case of transfer pricing, any comparable is being discussed, go and read the director's report and try to take from the director's report the facts about the comparable and show it how it is not similar to your case or your case of your client. If you do these things, if you present it in a chart form, your facts of your case, fact of the case on which you are relying, the decision, and what are the factors which had led to that particular decision. If it is a transfer pricing case, the comparable, the facts of the comparable, and how those facts are not similar to your case. If you do it, you will be making a lasting impression upon the members. It will be a very transparent and very comprehensive submission. The last thing which I will like to underscore is that whenever you are preparing your submission, be alive to the fact that it may not be only case where you are arguing. There may be other cases. And consistency is one thing which any member or judicial member or the accountant member in the tribunal or the judges in the High Court, Supreme Court rely upon. If you argue one thing in one case and totally different position in the other case before the same bench or even in the same court, that will create a bad impression. So be concerned about that, prepare accordingly. So these are few of the points which I thought I will share with you, coming right from my experience. So far as today's cases are concerned, I leave to Narendra. I do not want to say anything. He is the person who will take us through the facts, the decisions, the reason for the decisions, and then what learning we are getting from those decisions. Over to you, Vinay.
Thank you very much, sir. That was just a wonderful overview. And I'm sure now it would guide us through even understanding the way the cases are dealt with when our speaker Narendra Jain will be deliberating on it. Over to you, sir, for the starting with the main session.
Yeah, thank you, Vinay. Respected Piyush Chajet ji, respected Kota Srinivas ji, respected SP Singh ji, Vinay, Priya madam, and all the support staff, Prachi, and other teams of ICI. It's my pleasure to be here and share my few thoughts on some recent decision of international taxation. And SP Singh sir has laid down wonderful platform for this next 1.5 hour what we will deliberate on the decision. He has shared his wisdom, how we should read the decisions and how we should prepare for the cases when we are arguing the matter before the tribunal and high court. taking from where he has left. I will start with sharing my presentation. So we'll try and discuss some important decisions, recent decisions. Just a minute, I'll share the slide. So I hope it is visible.
Yes, sir.
Yeah. So let's start. I put it also.
Can you put it on the full screen?
I've just put it. I think it will.
It will take some time, couple of
Yeah,
seconds.
there's some small lag.
Yeah,
I think it should
no
come
problem.
now.
It has come.
Yeah. So what we will try and do is I've selected 3 interesting decisions on interesting topics. We'll try and understand these decisions, and post understanding these decisions, try to understand the concept related to these decisions, and try and see what are similar decisions or diverse decisions, and why the tribunal has come, or a high court has come to a particular viewpoint in this particular decision. We'll start with the interesting decision of Clifford Chance. It is on the concept of service fee. So here the assessee is a tax resident of Singapore, and it provides legal advisory services to several international clients, and it also has many clients in India. The assessment year involved are 2 assessment years, assessment year 2021, 21-22. In 2021, the services were rendered both remotely, and employees also traveled to India for rendering the services. In AY 21-22, the employees, naturally that was an year where there was restrictions because of pandemic, and employees did not travel to India. The entire services were remotely rendered in AY 21-22. The receipts were 15.55 crores in 2021 and 7.76 crores in the AY 21-22. The facts which are relevant in AY 2021 are, there were 3 employees basically, who had traveled to India. And one was Mr. Rahul Guptam, other was Mr. Shashwat Tiwari, and third was Mr. Jonathan Grandwell. Now, these employees, cumulatively, the first 2 employees, I'll call employee A and employee B for the simplicity purposes, their total stay in India was 120 days. The assessee's argument was the income is not taxable in India. The entire receipts is not taxable in India on 2 counts. One, there is no service fee in India because the number of days stay is threshold than 90 days. Second, there is these services do not satisfy the makeable available test which is there in India-Singapore tax treaty. There is no P, there is no FTS. It is not taxable as FTS. Therefore, the income is exempt. And therefore, I should get the refund of the TDS deducted in these 2 cases and for these 2 years. It is not coming full screen. Okay, just let me.
Slideshow.
I press the slideshow only.
ಇಲ್ಲಿ ಇನ್ನೊಂದು ಬರ್ತಾ ಇದೆ ನೆಕ್ಸ್ಟ್ ಸ್ಲೈಡ್ ಅಂತ.
Just let me, yeah.
Notes you were taking care of.
Is it coming now?
No, it is.
In my system.
Yeah.
It is fine. It is fine.
Yeah. Okay, done. Yeah. So the argument of the assessee was like this. See, the employees are in India for 120 days, the 2 employees, employee A and employee B. Employee C was in India for few days, but those were common days with employee A and B, so I will not consider the employee C. Employee A and B put together were 120 days. Out of those 120 days, 36 days were leave, where these employees were on leave. So I will exclude those 36 days. Then 35 days, these employees were not furnishing the services. They were engaged in business development activity. They were going and meeting the clients. They were meeting the prospective clients. They were doing certain technical presentations, they were giving quotations, and they were meeting, maybe engaged in certain networking activity. So I will try and exclude those 35 days while arriving at the threshold of full service fee. The third was there was a common 5 days overlap between employee A and employee B. And therefore, after excluding 36 days for leaves, 35 days for business development, 5 days for common number of days, the assessee's argument was that the employees are in all 44 days in that particular fiscal year, AY 2021. Whereas the threshold in India-Singapore tax treaty is 90 days. Therefore, since the threshold is 90 days and the employees are only for 44 days, I do not constitute a service fee. I do not constitute a service fee, and therefore the income is not taxable in India. How did the assessee demonstrate this? This is very important because, as SP Singh sir pointed out, the facts. So what did the assessee do? Assessee gave the evidences of the passport to demonstrate that what was the entry, exit, what were the number of days spent in India. The assessee gave the HR records, the extract from the HR records of the leaves of these two employees. The assessee also gave the declaration from the employees that these were the leave days, and on these leave days I have not worked for any client projects. I have not done any billable work. So they gave the time sheets and HR records to demonstrate that 36 days were the leave days, and that should be excluded. That is what the evidences assessee gave. In terms of business development, assessee gave declaration from the employee. It also gave the time sheets that these are the time sheets, these are the clients that they have met, and these are the time sheets which clearly differentiate between billable hours and non-billable hours. And these are non-billable days, and therefore we will exclude 35 days for the business development. Common days are anyway based on the passport. One could say that both the employees are there in India on the same days, and therefore they should have been excluded. So assessee was able to give good amount of evidence to support its contention on the factual aspect that the days 36, 35, and 5 have to be excluded. So look at it from 120 days. The assessee's argument is only 44 days should be constituted for the purpose of service fee, though the employees naturally would have got salary for all of the days, right? So the only 44 days should have been considered for the purpose of the constitution of service fee. And once you look at that aspect of 44 days, it is less than the 90-day threshold which is given in the tax treaty. Therefore, there is no service fee. And as I said, the other argument is it cannot satisfy the test of make available in the tax treaty. So it is not also FTS. And given that it is not an FTS, it is no business income. The same income is not taxable in India. Revenue naturally did not accept these arguments. The revenue went ahead and treated assessee as a service fee on 2 counts. They said 120 days is greater than 90 days. Therefore, it is a service fee. The revenue also said that there is a virtual service fee, taking a leaf out of the decision of ABB's case. The revenue said that it is a service fee. It is a virtual service fee. It is a service fee anyways because of number of physical days of present. It is also a virtual service fee. And therefore, it attributed the entire income to that service fee and taxed it for the entire income. And DRP confirmed the view. Based on the DRP's direction, you passed the final assessment order, and then the matter has traveled to the tribunal. Now, before we go what tribunal really held, we should try and understand what the service fee concept is really there in the India-Singapore Treaty. As we all know, service fee is another genre or another segment of a permanent establishment where we have the fixed place fee, general descriptions under 5.2, exclusions are there. Then 5.4 we have under the Singapore Treaty, the supervisory fee in relation to building site, construction activity, assembly plant, assembly activity. Then we have 5.5 of Singapore Treaty, which deals with the exploration of minerals, the activity services in relation to exploration of minerals. And then we have 5.6 being the service fee thing. What does the service fee in Singapore Treaty provides? And how do we try to identify that the assessee's argument of excluding 35 days, 36 days for business development, 5 days, common days, how is it justified? Is it justified? What does the Article 5.6 provide? It provides that enterprise furnishes services. So it should furnish the services. Please look at the words furnish the services, right? Furnish the services, excluding three category of services which are excluded from 5.6. They are, one is the FIS. If they are already fees for included services, then you do not have to look at service fee article. Then there are supervisory services under 5.4 and exploratory service exploration related to mineral oils in 5.5. If they are following in 5.4, 5.5, or they are following in FIS definition, then you did not look at the service fee. Those will be the respective articles where one should go and look at whether for the taxability. This is also important because look at the supervisory services. A supervisory services, it can also come as a service fee, right? The 5.4 article of Singapore Treaty has a threshold of 183 days, whereas the service fee article has a 90 days threshold. So if I am a supervisory services in related to building site, construction, assembly, etc., then it is favorable for me to go to 5.4 rather than going to 5.6 because 5.6 is a lower number of threshold. And given that 5.4 overrides 5.6, ideally, and it is more also beneficial to the assessee, one could, in those kind of cases where it is a supervisory services in relation to this or falling in 5.5, in those cases, assessee should always evaluate taking the benefit of those articles because you have a more number of days, 183 days threshold rather than 90-day threshold when it comes to the service fee thing. So furnishing of services within the contracting state, within a contracting state. So clearly the words used are within a contracting state, furnishing of services through employer or other personnel, and the activities of that nature continue in that other contracting state, in this case, India, for an aggregate period of more than 90 days in the fiscal year. And if the services are rendered to associated enterprise within 30 days in a fiscal year. So what are the terms that we should understand to understand this decision in a better way? One is furnishing of services. Second, we need to understand within a contracting state. Third, through employer or other personnel. Fourth, 90-day threshold and the fiscal year. Fiscal year, slightly easy to understand. If you see other treaties, they will use the term 90 days within 12 months or 9 months within 12 months. So there will be different terminology which has been used. The Singapore Treaty uses 90 days within a fiscal year. Fiscal year means the previous year from the Indian perspective. So 1st April to 31st of March. So I will have to look at 90 days only in this defined period of April to March. Just to give an example. So employee comes to India to render services on 1st February and he continues up to 31st May. So maybe say he's there for 120 days or 122 days, whatever it comes to, right? Now he has crossed the 90 days, but when you look at the fiscal year, he is less than 90 days. So in both the years, there is no permanent establishment. If he had come in December and he had continued up to March, and that would have been 120 days, in that case, there would have been a permanent service permanent establishment. But in cases from February to May, because this is split into 2 fiscal years, this is not going to cause a permanent establishment in the context of India-Singapore Treaty. But this is not a language which is there in all the treaties. There could be treaties where the language is 90 days in 12-month period. So if you take 90 days in 12-month period, then the example which I have given, it is 1st February to May, it crosses 90 days. It is any 12-month period. You do not have to restrict yourself to the fiscal year. Whereas in the Singapore Treaty, there is a specific thing that gets restricted to the fiscal year. And other treaties may use a different language. Ideally, it is a 12-month which has been used. Another variation you should keep it in mind in this 12-month period is in the example which I have given. 90 days in 12 months. So the employee come on 1st February, he is there up to 31st July, right? He will form permanent establishment. The company will form permanent establishment in both the years, because you will have to look at cumulative 90 days and it crosses a cumulative aggregate period of 2 years, any 12 months, and it crosses 90 days. So in year 1 also you are permanent establishment, in year 2 you also your permanent establishment, though respective years are less than 90 days. Only exception is India-US Treaty and India-Canada Treaty, where they have said if one of the years is less than 30 days, so someone comes on say 15th of March and he works up to June, in the year 1, when it is 15th March, that will not constitute a service permanent establishment. Whereas the year 2 will constitute a service permanent establishment. It is crossing 90 days. So this nitty-gritties of number of days calculation is something which one has to keep it in mind in the respective treaties context. We'll come back to Singapore Treaty. It uses 90 days in the fiscal year. So fiscal year is there, which I understood. 90 days, more than 90 days, which I have to understood. How to calculate 90 days, I'll come to that. Okay. Look at the term furnishing of services. That means services should be furnished. And such activity should be more than 90 days. So the activity of furnishing of services should be more than 90 days. So the question actually there, which is there in Clifford Chance also, the periods which are holidays, periods which are business development, periods which are common, anyway we'll come to that. But look at the activities of holidays, leaves, furnishing of, business development. So can you say that there is a furnishing of services in these days? Furnishing is a concept which will mean that there has to be two parties, one party who is providing the service, one party who is receiving the services. There cannot be furnishing of services with one party. So when I do a business development, am I working for self? Am I working for self? I'm not, there cannot be services to self. I'm working for myself. So that aspect has to be kept in mind. Given the words used are furnishing of services, it is very important that we have to keep this in mind, that services should be actually be rendered. Contrast this with other articles. If you see dependent personal services, there the words used are present in other state. So if you're present, it is sufficient. Furnishing is not there. So if you have to calculate 183 days, you have to look whether the other party is present in the other state, right? If you see the even the independent personal services stays in the contracting state. So if you're staying in the contracting state, it is triggered. You don't have to, whether services are furnished or not furnished may not be really relevant. What is relevant is you have stayed in the other state. Same with our residency of section 6. You are in India for number of days, you trigger the residency threshold. So in contrast, when you look at these particular clauses, when you look at those clauses and when you look at the clause of service fee, they have said furnishing of services and such activity continues for so number of days. The natural question which came up before this tribunal in Clifford Chances, can I exclude the leave days? There is no furnishing. Though the employees in India, there is no furnishing of services happening on those particular days. Right? So this is one concept which we have tried to understand and see what the court held on this. Then within a contracting state. So that means the services should be within a contracting state, not to a contracting state or for a contracting state. That services should be rendered within a contract, furnished within a contracting state, which naturally reflects that there should be physical presence in that particular state to provide the services. So when the virtual fee concept, which the revenue has been arguing, which started from ABB's case, whether that is justified or whether that in the context of language, maybe today the tax policy may require a change, that's a different issue. But in the context of language, whether today we can say that when there is words used within a contracting state, can it be said that virtual rendering of services also can be said? Then it talks of through employees or other personnel. Through employees. That means the services should be rendered through employees or other personnel. Both employees here and other personnel are individual, that means humans. You have to be there. There cannot be someone else who is rendering a service. There cannot be someone other than humans who can be falling in the part of the service fee concept. We cannot bring in them based on the current language which is used in the treaties. And when we talk of employees, it is understood. There's an employer-employee relationship, and those are the people who will get covered in the service fee concept. But then it brings in the concept of other personnel. The courts have held that, Lucent Technologies and other cases have held that when we talk of other personnel, those other personnel would be such personnel who are working under the control and supervision of foreign enterprise. So the foreign enterprise should be having control and supervision over those other personnels. Only in those contexts, the other employees' time for the period for the other employees also can be included in the 90-day threshold. Where there's an independent subcontractor who is working as per his own control and supervision, no doubt he is working as per the say work order or PO or whatever it is, as per that he is working, but he is not under the direct control and supervision of the foreign enterprise. In those cases, the coverage will not be there. They will not be included in the other person. Then we have the 90 days. The treaty uses 90 days. As I said, some treaties may use 183. UAE treaty uses 9 months. The problem with 90 days and 9 months is again there. So when we talk of 9 months, what do you mean month? Possibly we have decisions today which says take the British calendar month. So 30 days period should be taken as month, and you calculate the month based on that. Possibly you will see the number of days divided by 30 and see where it is a month. When you take a month and when you take a day, the problem which is coming up in these kind of cases is when you say day, if there is a 7-day week and there is a Saturday and Sunday, can I say the furnishing of services are only for 5 days or furnishing of services for 7 days? On Saturday, Sunday, naturally services are not furnished. These are natural breaks. But when I come to a month, there I can't, we are not looking at individual days, I'm looking at months, what services are rendered. We'll see as we go forward into the decision, Clifford Chance decision, what the tribunal held, and then come back to these discussions and then summarize, try and summarize the understanding on these particular issues. So okay. Now, first thing, the tribunal held is that the employees were present in India in less than 90 days after excluding the vacation period, business development days, and common days. So it's clearly held that they will exclude the vacation days, vacation period, business development days, common days from the calculation of 90-day threshold. The tribunal, referring to E-Fund's decision, observed that to constitute a service fee, actual performance of service in India is essential. Accordingly, only when the service is rendered by the employees within India with their physical presence during the financial year shall be taken into account for computing the threshold for creation of service fee of the assessee in India. So the tribunal clearly brings out that there should be employees. The employees should be physically present in India. They should furnish the services. If these cumulative conditions, and the 90-day threshold should be met, if these cumulative conditions are not met, then naturally there is not going to be service fee trigger. And in the case where 21-22, no employees came to India, entire services were rendered from remote location, the question of service fee did not arise in 21-22. Now coming to 2021, the 120 days were there. The first thing they said is, we will exclude vacation days of 36 days, which has been substantiated by the assessee by furnishing relevant evidence. So once you exclude 36 days, the days come to 84 days. So it all at that level itself, it goes below the 90-day threshold. No doubt the other things are also discussed in the decision, will come to that. But at that level itself, the assessee was home. Assessee was safe in terms of not taxability. Now, the logic for excluding 36 days, as I said, when you're talking of furnishing of services, and here, look at this case where the evidences are pretty strong. There's an HR record which has been given by the company, which clearly says that these were the days on the leave. There is an employee declaration which has been given, which very clearly says that on these days, I have not done any business activity. I have not interacted with any clients. And there is clearly a leave day, which is that both the employees, from the name it appears, also would have Indian roots. So they may have families here, they may have relations here, they may have friends here, whom they would have maybe met on those 36 days or attended certain functions, etc., cultural events, etc. So those 36 days which have been excluded. These 36, the leave days were also excluded in the earlier decision of Linklaters. The tribunal in Clifford Chance refers to the Linklaters decision and then comes to the final conclusion that 36 days should be excluded. However, from the facts of the case, it is not very clear that whether these 36 days include the natural breaks of Saturday, Sunday also, or they are only the full leave days. So that aspect, that factual information we do not have from the decision. So we really don't know how the 36 days have been calculated. My feeling is the number of days that have been excluded, we are going from 120 to only 44. We have come from 120 to 44. It's a very almost, we will say that it is almost 65% cut from the number of days which the employees had spent to India. So there is a possibility that even Saturday, Sundays might have been excluded, but I'm not sure. I mean, that data is not there, information is not there in the decision, so we can only presume, but we cannot concretely say what would have happened. However, given that the language which is there in the comment in the article furnishing of services, if we also go further deeper into the research and see the OECD and other commentaries, they say these, no doubt OECD should not comment on service fee because there's no service fee article in the OECD model convention itself. But anyway, OECD talks and says that it should be working days. It should be working days. The furnishing of services word is used. Contrast, as I said, contrast this with the words stay in India, present in India, where the physical presence in India is good enough for the trigger of, say, fixed base or for the trigger of employee taxation crossing the, not getting a short stay exemption. Vis-a-vis service fee, furnishing of services word is used, and services, the activity of furnishing services should be more than 90 days or whatever, 120 days or 6 months or whatever it is. The activity of furnishing should be there. So possible to argue, possible to look at the situation that only working days should be considered. This no doubt casts a more heavier burden on revenue to demonstrate that there is a service fee, but this is going by the language of the treaties. Do language require change in the changed circumstances? Possibly, in my opinion, yes. But given that the current treaties are also being signed in the similar languages, possibly because that such language is there in the treaty, we have no choice to interpret based on what current is the current practice of interpreting those terms. So it might be a more burden on the revenue in terms of demonstrating service fee if we exclude even the natural breaks of Saturday, Sunday. But the language of the treaty and current judicial viewpoint pushes us to say that it should be actually 90 working days which should be considered for the purpose of service fee, Next comes the concept of excluding the 35 days business development. This is very interesting, and this is the first time I've seen in the decision that business development days were also excluded, and tribunal accepted that arguments. The business development days, the associate says that the employees are meeting clients, prospective clients, not the current clients, prospective clients. They are giving technical presentations. They are doing some amount of networking. They are sending quotations. Again, the fact is not available whether any of that were also concluded into the contracts. That evidence is not available. So we really don't know that whether this 35 days, again, it is a large number of days. It is not a small period. It is a large number of days that two employees are doing activity of business development for 35 days. Whether it terminated into any contract, that factual information revenue has not dig into. And if these 35 days of hard work has, say, resulted into any work, into any contracts, or any contracts were concluded, then whether it would have resulted in a DAPE, yes, it could have resulted in a DAPE, dependent agency permanent establishment. But again, this is not a line of investigation that revenue has done. Possibly that line of investigation could have also thrown some light on whether that 35 days of work really, whether resulted in concluding a contract. As per the evidences or as per the facts available today in the decision, the employees were meeting potential clients. They were doing some technical presentations, possibly giving presentations about the services or about something more like law of the Singapore law or something more. And those 90 days, can you say they have furnished a service to clients? Possibly they have not furnished service to clients. It is like a self-development. It is like a self-development which is happening. It is service to a self. It is like a stewardship function also, one could say. Morgan Stanley would come in here. The concept where stewardship was brought in, that if I'm doing something for myself, I'm not furnishing a service, I'm doing a quality check, for example. So it's a stewardship function. That period cannot be calculated for the purpose of calculating the service fee, that cannot result in a permanent establishment. So that argument the tribunal has accepted, saying that there is no services that were rendered on these 35 days. It is a site of a service to itself, and therefore it should get excluded. It should get excluded. Whether they should have looked into the aspect of whether these 35 days of hard work resulted in a conclusion of a contract and therefore it was a DAP is something which we do not have the facts. Maybe someone should have made an investigation on that side, but that's for some other day. But this is what we are taking from us is the business development day from which the services are rendered to itself. In those cases, those cannot be included for calculating the time limit of furnishing of the service. That should be excluded. Then we come to the last 5 days, which now is possibly a settled decision, because you do not use the word man days in Article 5.6 or any other service fee article that we have. Furnishing of the activity of furnishing of the services should continue for 90 or more days, right? So when we are talking of these kind of overlapping days where there are two employees being excluded, and has the other decisions of the tribunal, including the Clifford Chance earlier decision, as the solar days is what we should consider. The solar days, not the man days, but the solar days we should have been considered. There are quite few interesting decisions also in the context of these number of days. There is one decision of Bangalore Tribunal, Electrical Material Center, 90 days, 4 employees. So if you look at 360 days of services rendered, the UAE treaty, it was the Saudi Arabia treaty where the threshold was 182 days. Right here, 90 days was there and 4 employees were there. So you are below the threshold, therefore no service fee triggered. Is there a time to relook at these kind of thresholds? Yes, there is a time to relook at these kind of thresholds. Based on the language, decision is correct. Based on the practical situations at the ground. Because if I have to render services for say 1,000 days, I will just deploy more number of people and bring the number of people, plan it in a way that there are overlapping days, and then plan it in a day that I come below the number of threshold of say 180 days or 90 days, or maybe 9 months in UAE treaty. UAE treaty has 9 months threshold. Saudi Arabia has 182 days. Singapore has 90 days. So these are large number of days where I can deploy an additional manpower, ensure that there are overlapping number of days for them. Therefore, the overall threshold, you are going to again exclude the holidays and leaves. So the service fee in those cases, the trigger of service fee in those cases could not even happen. There is where one has to relook whether the language really is serving the purpose for what it was meant in the statute, and whether that requires a relook. Possibly yes, but in the context of the language, the decision appears to be correct. One wonders whether revenue should have looked at fixed place fee rather than looking at a service fee. Given that certain parameters were already laid down by Formula One's decision of Supreme Court, the number of days are quite large here, 120 days, business development 35 days. So in those 35 days, where were the employees staying? Whether they were staying in hotel, whether they were in a client location, even in the days when the services were rendered, what access they had to the particular premises, whether they had set up a small home office at the hotels or they were working from some relative's place. Maybe some investigation into those facts could have changed the kind of decision we have now vis-a-vis what in fixed place fee, even with a very small number of days, as we all know, week or 2 weeks in the case of Formula One, was accepted by the Supreme Court because the tests were satisfied in those cases. I'm not saying that a week or 2 weeks may be correct in all cases, but if the number of days are really large and there is a sort of a permanency in terms of the activity which is being done, there is something which the revenue could have looked at it. Because look at this case, the treaties where we have make available clauses and service fee trigger is 90 days or 120 days or 180 days. The make available clause may not be satisfied in legal consultancy kind of cases, because naturally you have to go back to the same firm if you want any additional legal consultancy. because the services are rendered, the consultancy is given. But if you want a new point of services, if you want that doesn't make available any knowledge skill for you to yourself do that services. You really go back to that person to get the services again, right? So therefore, the make available test may never be satisfied in these kind of services. And if the make available is not satisfied, if the service fee trigger is not satisfied, the income would naturally be not taxable based on the what the treaty provision is providing today. So there has to be looked at different aspects, different angles to say what is the really the service that is probably what is the real nexus in these cases to say that it is a taxability. Whether virtual P is a real nexus, again, the all it was born out of the decision of ABB FZ LLC's case, where the assessee, because it is in a UAE treaties context, it is in the context of I think UAE treaty, where there is no FTS article in the treaty. So assessee's argument was there is no FTS article, the 9-month threshold for the service fee is not triggered, and because the 9-month is not triggered and there is no FTS article, it qualifies as business income, no P, no taxability. The Bangalore tribunal took a view that there is, in the current context of digital scenario, it is sufficient that for calculating this 9 months, the services which are rendered virtually, so there is an onshore service, offshore service, both has to be aggregated, and then one has to calculate the 9-month threshold. And based on that, the service fee trigger was accepted. However, the language used is within the contracting state. To that extent, this may not be proper decision. This has been discussed in the cases of Clifford Chance, where revenue has brought in the virtual P concept and argued that this should be considered for the purpose of taxability. The tribunal has concluded that the virtual P concept, which is discussed in OECD interim report of BICS project, cannot be applied here. India has not accepted this, and India has not implemented this. Second, the present service fee provisions require physical presence for rendition of services, and that is what should be applied. So very clearly, the virtual P has been done away with. Very clear, it has been provided that has to be a physical presence in India, and only on the basis of such physical presence, the service fee trigger will happen. So for us, the takeaway from this decision is, one, factually, I should have strong documentation in terms of timesheet of employees, travel records, passport copies, and any other evidence that one could look at to demonstrate that how the days have been spent in India. Each day has to be meticulously tracked and said that whether it is falling into furnishing of services, billable hour or working hour, and non-billable, non-working hour. That has to be done on a day basis. Overlapping days between the employees will naturally be excluded, only solar days to be taken, not the man days. Then we have to document even the leave properly, business development days properly. That all of that has to come into the factual narrative, the factual evidences has to be very clear in these circumstances. And especially in the treaties where make available is there, if service fee is not triggered, and make available test naturally may not get satisfied in case of legal consultancy, those cases naturally will be outside the tax ambit. Now, in the treaties where the make available test is not there. So if I take, say, for example, Japan, where it is a plain vanilla managerial, technical, or consultancy services, which is similar to our 917. In those cases, naturally, if it is not a service fee, it will still be taxable as the fees for technical services, gross basis taxation of 10% or whatever rate the treaty provides for. But however, in the major treaties like Singapore, UK, US, where all these decisions we have seen, whether it is Linklaters or Clifford Chance, are coming from these jurisdictions, that is because there is a make available clause, and it gets outside the taxation ambit even under the make available clause. And even if the service fee is not triggered, in those cases, the taxability is not triggered, and the income is not taxable. So this is on the first decision of Clifford Chance. This is on the first decision of Clifford Chance. Let's move to next decision. Next decision deals with a very digital scenarios, and we have been seeing these kind of digital services day in day out today, from last almost 2.5 decades, right from where the tag report came, the Indian report or e-commerce committee report came, and the various services, the nature of services naturally have gone increased year on year, right? The nature and new kinds of services we have seen. So with this decision, taking this decision as an anchor, we'll try and see that in the context of these kind of services, database access and other related services, where we stand today, right? Then we have equalization levy 2.0. We'll touch upon that also and see applying that today, what could be the circumstances. Just to capture the fact of this decision, it is pretty simple that there is Indian subscribers to legal database. LexisNexis is a global database like our Taxman, TaxSutras, etc., which give access to judgments, articles, and other legal aspects based on a subscription model. So assessee pays the subscription fees, he gets access to those judgments, articles. These are in this case, the assessment year involved are prior to equalization levy 2.0, is 13, 14, 14, 15 assessment years. So these are those years which are involved, right? The assessee is a US company which got this income, and it claimed that it is not taxable. Again, the reason is simple. The assessee's argument that there is no PE in India. This income constitutes business income. It is not royalty or FTS. Therefore, it is not taxable, right? The revenue takes a view that it is taxable as technical consultancy services. It is a fees for included services under Article 12.4. They also discuss upon the royalty aspects. And basically, the conclusion is that Article 12 is applicable in this case, and therefore, it is taxable in India. DRP naturally confirmed the view of the revenue. Then the tribunal, following an earlier decision of LCware information system of Mumbai ITIT, where also there was an access to a database, not legal database, some other database, concluded that a access to database cannot be furnished. There cannot be rendering of services. We are talking of rendering of services, right? In whether in 917 or even 12.4, we are talking of rendering of services. That cannot be the case with a database. And you are basically providing an information. There is no human intervention, Bharatiya Airtel's Supreme Court's decision. The conclusion was it is not taxable. Naturally, the revenue filed an appeal to the Delhi High Court, and Delhi High Court has concluded this matter. Okay. What does the Delhi High Court hold? What does the Delhi High Court hold? And then we'll try and apply these principles and see what happens, right? So here, the Delhi High Court, from the first point, it says, mere granted, the assessee has mere granted a subscriber to a legal database, it would not fall within the ambit of 917. So you don't even have to go to the treaty. It will not fall within 917. It has not been shown that assessee has been providing any managerial, technical, consultancy services to the subscribers. So what assessee is providing is only access to database. There is no managerial, technical, or consultancy services. Very clear that there is no other service which has been provided. So therefore, when we are talking of rendering of services, again, rendering of services visualize one service provider, one service recipient, which is not there in this particular case. And that it can, by no stretch of imagination, it can be fees for technical services. Then comes the aspect whether it can be royalty. Then the Supreme Court High Court discusses the Supreme Court decision in engineering analysis. It then also discusses the Delhi High Court decision in Infrasoft and Microsoft. And it then comes to a conclusion that access to a database does not amount to transfer of a right to use a copyright. And a clear distinction exists between a transfer of a copyright and mere right to use a copyrighted article, and taking advantage of a copyright. So both of these aspects, which Supreme Court in engineering analysis has discussed in a very detailed manner, those discussions are taken by the Delhi High Court, and the Delhi High Court concludes that it is not a royalty. It is not a royalty. Then it also discusses Article 12(4)(b) dealing with make available test. It says that here there is no make available test cannot be satisfied. Naturally, what you really get is an article or a legal database. Information is passed on, but whether assessee gets the right or whether there is a make available in terms of transfer of skill, knowledge, etc., that is not happening. Assessee gets the information of the decisions, etc. Assessee really is not enabled to create a similar database. Assessee is not enabled to create a similar database, right? So the make available test is also not satisfied. The make available test is also not satisfied. So on all the counts, whether on the count of FTS, whether on the count of make available, whether on the count of royalty, these are years post 2012. That is where the amendment to the royalty definition happened in the section 916, where the extended definition of royalty is there. No doubt the revenue does not discuss or brings in those amendments into the discussion in the Delhi High Court, but as a point, what I'm trying to emphasize is these are decisions post 2012. That means where the amendment had already happened in the statute, right? So access to database, very clearly the Delhi High Court said that it is not covered in the ambit of taxation, therefore income is not taxable. In recent times, there have been string of decisions which have dealt with these kind of digital services. For example, there was a decision of Plural Site LLC. It was an aggregator of videos. So it aggregates the videos from varied contents, and then those videos, the subscribers can subscribe to the website and can view the videos. Similarly, there was a education company where its videos were covered. Flactiva, where news database was there. Everest Global research reports were given. Salesforce, where the client using the web portal of the company themselves generated the reports whichever they wanted. So basically software as a service kind of a model, where the software was there on the web portal. Assessee uses that software, generate the kind of report it wants to generate, and then it is a subscription is paid for that particular thing. Urban Ladder, where there were multiple activities like AWS server access fees, MailChimps for sending bulk marketing emails, online ads, Google's case of AdWords, which is now again in revenue's favor, assessee's favor. So there have been string of decisions in recent times after engineering analysis, where various digital services gradually one by one have been holding in favor of the assessees to say that it is not taxable. Naturally, the existing language of the statute does not extend its ambit to such kind of services. Can we say it is piece for technical services? Naturally, no, because there, when we talk of rendering of services, you can't say access to a database is the rendering of services. Will it satisfy the make available test? It will not satisfy the make available test. Is there any copyright which has been given, right to use any copyright, patent, trademark, etc., which has not been given in any of these cases? So the existing framework of statute naturally does not cover within the taxation ambits any of these kind of activities, right? We will also have in future more new kind of digital services, right? We will have generative AI, we will have Chat GPT, subscription given to Chat GPT, generative AI. So tomorrow, even the LexisNexis case, say for example, after 5 years, you will see a decision where you give the question on the LexisNexis database, it gives you directly the answer, or maybe gives a draft opinion, or gives you a draft submission, or whatever. Whether the subscription fee for that, whether again it will be taxable as a royalty again, or it will be a service. We are still using the word rendering of services. So there again, it is just in subscription to a database, subscription to a service. But whether it is a rendering of services, again, the existing language would possibly not cover within its ambit such kind of activities. So the digital services, what we have today, digital services will further evolve in future, and new kind of digital services will come into picture. those still applying the same rational what the decisions of Delhi High Court is giving may not really fall within the ambit of FTS or royalty or fees for included services. The case becomes much stronger in cases where the make available test is there. In those cases, it may still not be there. These recent string of decisions clearly bring out that fact that that could be the trend going for majority trend. I accept there are decisions which have gone the other way around also, but there could be major decisions which go in this way. Naturally, this is where the government thought it fit to bring in the equalization levy 2.0, where this concept of e-commerce operator has been brought in, e-commerce supply and services have been brought in. And then the question will come, assuming these were the years which we are talking today, say for example 23, 24, 24, 25, whether they will fall in equalization levy, whether they will fall in royalty or FTS, right? The language in FTS and royalty remains same, what has been discussed in these recent decisions. So should I look at the equalization levy, right? Equalization levy today talks of e-commerce operator who is having a platform, e-commerce supply and services, right? So here there is no supply of goods as such. There is basically a service which has been provided. The service in, can we say an access to database is a service? We should keep it in mind the difference in language used in equalization levy has vis-a-vis 917. 917 uses the words rendering of services. Equalization levy uses the providing of services. Services to render, there has to be a human intervention. But services to provide, any standardized services can be provided. It cannot be rendered, right? So when there is a provision of a service, as we see in equalization levy 2.0, in those cases, in my view, it could fall in that particular category. No doubt there is a 2 crore threshold and that test has also to be satisfied. But if that test is satisfied, if there is an e-commerce operator, if the money going from the Indian subscriber, resident subscribers, or people who are using from India is crossing that particular threshold which is given in equalization levy 2.0, these cases will possibly fall in the 2% equalization levy, that is 165 capital A charge, and there it should be taxable at 2%. Now, once it falls there, look at the definite 1050, the exemption clause, which says that if it is chargeable for equalization levy, it will not be chargeable for income tax. The explanation added says that incomes which are in the nature of royalty or FTS will not be liable for exemptions, right? But the question is, when I'm going for a legal database today, whether it is royalty FTS, the courts are saying it is not royalty FTS. So therefore, the explanation one should ideally not be applicable in those cases. 1050 should be applicable in those cases, and then it should go to equalization levy. The problem is what position the revenue takes. And if revenue takes a view, and say, for example, today revenue takes a view that it is royalty. Subscription to legal database in AY 24-25 is a royalty. After 7 years, 8 years, you get a decision that it is not a royalty. The revenue would have also lost the time to levy the equalization levy, right? They would have lost the time. There is no assessment time framework given in the equalization levy provisions, Finance Act 2016. But ideally, even if the time periods are not given, the courts have consistently held that reasonable period should be seen, right? So considering that aspects, there could be a loss on both the sides. So a rational decisions will have to be taken somewhere that it really falls where that clear-cut guidelines should be given. Possibly post pillar 1, pillar 2, we may get some more ideas on, clarity on this. But if the position today is not taken very clearly, whether it falls in royalty or whether it falls in equalization levy, that is income tax vis-a-vis equalization levy, there's a risk that it may not be taxable either in both the fronts, or the risk that litigation may never end. So there was some sensible viewpoint that should come across. Hopefully, we may see some traction going forward on this particular point. Next decision of GoDaddy is a very similar decision. It's a very similar decision. Here, the tribunal had taken a different tangent when it decided the case, right? So as we all have heard the name GoDaddy.com, it provides registration services for domain names. It does web hosting, web designing services, right? It did not have a P or fixed place of business in India. The assessment year involves a 1314 to 1516. The SSC itself offered web hosting and web designing services as royalties. It did not dispute the taxation of the web hosting services and web designing services. The SSC was on the issue was on the registration of domain. No, it registers the domain name with, so there's an association, Internet Corporation of Assigned Names and Numbers, which is a main mother body through which these domain name are registered, which controls basically the entire functioning of this. There are various organizations like GoDaddy.com and there are other players in the industry which act as intermediary for registration of these domain names. As we all know, and you would have practically done also, we go on the website of GoDaddy.com, we find out whether a particular domain name is available or not. If it is available, then we pay the requisite fees and then register that domain name for an annual period or 2-year period or 3-year period as one's choice. So it is a availability for a limited period. It is available for a limited period, right? The GoDaddy.com gets that registration fees. It has to pay back to ICANN, and whatever are its fees it has to retain, and whatever are the fees that it has to pay to ICANN, it remits it further. So this is how basically the business model works. So the function of GoDaddy is registration of domain names. It did not dispute web hosting services, web designing services for whatever reason, right? And it offered as royalty. Revenue changes that to fees for technical services. Revenue changes that to fees for technical services. The rate of taxation for royalty and fees for technical services is same. So there was, it would have been only an academic discussion whether it is royalty or FTS. The net effect tax effect would not have changed. So naturally, SSC did not bother to spend on lawyer fees for debating whether it is FTS or royalties. So that issue is not in a debate for the subsequent years. For the web designing, the web domain name registration charges, the revenue took a view that it is taxable as 916 royalty. Also, it is taxable under 12(3)(a) of India US GTA for right to use of servers maintained by the SSC. This is how the revenue took a position. DRP upheld it. Before the tribunal took a different tangent. It said that the domain names are like trademarks, right? If you have a very similar domain name, so if I today go and register tata.com, no doubt there is no restriction for me to register, but naturally I can be sued because I'm using a very similar name to a business organization whose name is well known, right? So in that context, under the trademark law, passing off and using a similar name, I could be penalized. Injunction will be basically given that I should not continue to use that particular name. So there were some decision in the context of trademark laws where in the context of domain name, Satyam's decision, which the tribunal relied, basically in the context of cfi.com, the tribunal relied on those decisions in that decision of Satyam and came to a conclusion that it is royalty for right to use of a trademark. So from what EU had done, the tribunal moved to a different tangent and said that it is a domain names are trademark and there is a right to use of a trademark, and therefore it is concluded that it is taxable as royalty. Naturally, SSC had to travel to the High Court, and High Court in a detailed decision discusses various aspects of this. Now, look at what is the role of GoDaddy. We have to understand the role of GoDaddy to really come to a conclusion that whether there is any right. No doubt, today domain names are valuable. They have their own value assigned to it. But whether that can be a right, when I register that with GoDaddy, whether that can be a right to use a trademark. That was a critical issue before the Delhi High Court. Now, if you see today, I can register the domain name with GoDaddy, but I can naturally change that also. I can go to a different service provider also. So what is the role of GoDaddy? It is like an intermediary. It is a registrar of domain names, right? It has an agreement with ICANN, accreditation agreement with ICANN, and it does not have an ownership in the domain names. It doesn't own any of the domain names. Even based on the agreement with the ICANN, it clearly brought out that the domain names are of the customers, and the domain names are of the customers, and GoDaddy does not create any proprietorship rights in the domain name. Its role is of a registrar. It registers it, right? People come to its website, select the name, pay the payment, and it goes at. If I have a ownership rights, the ownership rights are not for a 1 year or 2 year, right? They will be last for a much longer date. When you talk of trademark or goodwill, these are all for much longer period. And it is not something which has been protected. It is not something which has been protected by any this thing. One could go and take any domain name. So after threadbare analysis of the agreement with the ICANN, after bringing out various aspects, the High Court brings out the role of GoDaddy. The GoDaddy's role is that it is an accreditation, it is a registration agreement. It is more like a registrar of patents or other CAs or who are providing a similar services, other legal people who are providing a similar services. And it is not the owner of the domain name. The situation would have been different. The High Court says that if it was selling its own domain name, if it was selling GoDaddy.com itself, then it would have been different that it is transferring the right to use the domain name. It is not doing that. It is only giving registration for this thing. And no, it is not the owner of domain name. When it is not the owner of domain name, the question of it giving right to use of the domain name itself does not arise, right? So on this basis, the High Court observed that the arguments of the tribunal of going into the aspect of trademark were not correct. Then it goes and discusses the decision of Satyam Infobay. Satyam Infobay was a case where the owner of domain name had filed a case, right? A owner of a domain name had filed a case saying that they wanted an injunction because there was a similar other person using a very similar domain name. And in that context, the Supreme Court in Satyam Infobay has discussed the various aspects related to the domain name and gave the right or protected the right of the assessee with respect to that domain name. So the decision of Satyam Infobay was with respect to registrant and not registrar. The GoDaddy is registrar. The Satyam was registrant. So the High Court brings out this distinction between the Satyam Infobay's case. High Court brings out this distinction between Satyam Infobay's case and GoDaddy's case, right? And say both the activities or rights available are different. Satyam was the owner of the domain name itself, right? The Satyam's case was concerned with the rights of the domain name owner and not the registrar. Therefore, SC observed that it would have been relevant if the associate had granted rights in or transferred the right in the domain name of GoDaddy itself. Looking at all of this, it did conclude that domain name taxation will not fall within the definition of trademark. It will not fall within the definition of trademark, and it will not be royalty within the 916. The High Court doesn't go and discuss the treaty provisions. The SEC, in fact, has not pressed into the treaty provisions during the arguments. So even the tribunal's decision was on the short point whether the domain name is a trademark and whether there is a right to use of trademark. Therefore, on that aspect itself, the High Court's decision is focused that the registration of the registrar who's a registrar for whom it will not come into picture. Right? Whether going forward this can be liable for equalization levy, possible it can be again liable for equalization levy 2.0 has been discussed in the case of the LexisNexis subscription fee in the case of Relax Inc. So that entire concept that we have discussed there that we'll have to also apply in the concept of GoDaddy.com and see the services today what GoDaddy.com is providing, like web hosting services, web designing services, or the domain name registration services. These services also in the new context or the new law position, equalization levy 2.0 could be extracted. So what are the takeaways from decision of relaxing or GoDaddy.com for us? The takeaways or the learnings that we can take away and what we can apply. One, the era of new digital services, what we have, whatever, whether we call it web hosting, whether we call it domain name, whether we call it a legal subscription, database subscriptions, where we call it AWS server subscriptions, where we talk it video services, aggregation of video services, or various these kind of online education, edutech services. So these kind of services, the law today, as it exists, do not really cover the entire gamut of these digital services. There is a huge gap in terms of what law today provides and what these services are today providing. Similarly, when we have new areas of services like a software as a service, we have maybe chat GPT, or we will have generative AI subscriptions. So where we are going to pay subscription for this. Some of these have already started, right? So if I apply the same principles laid down by Supreme Court in engineering analysis, what these decisions have also applied, then in those cases, it is going to be still a situation where these incomes may not be taxable in the source country in India. So the entire thing of equalization levy or pillar 1, pillar 2, what we're discussing today is very critical for the source countries and the market economies like our country, where this has to be focused. And going forward, these new services and what new services will come in future, how we can bring it within the ambit of equalization levy. We'll have to be a step ahead as a country. We'll have to be a step ahead of the entrepreneurs who are bringing out new services every day in, day out. So we'll have to understand these services, see whether they are following with this, which services can generate so much of revenue. There has to be some analysis of that to ensure that they are well covered within the source country taxation. Equalization levy 2.0 naturally covers a wide ambit of services, but still it lacks certain specific parameters which needs to be covered. It doesn't have an assessment framework. In the Finance Act 2016 does not provide a proper assessment framework, right? So that has to be brought into this. The clarity has to be brought in that where there is an overlap, where the guidance has to be very clear that where today revenue is taking a position that it is a part of royalty or FTS, but really it can fall in equalization 2.0. It should not happen that we miss the bus on both of them. So a clear-cut guidelines has to be available that what falls in more of this. That will help for a better compliances and better tax collection and also reduce these kind of litigation. Whether there is a requirement of a relook at the aspect of human intervention in context of fees for technical services, when we look at the Bharti Airtel's decisions or Kotak's decision, where there are automated services, more and more services are going to be automated. And when we say a human intervention is necessary or not necessary for the purpose of qualifying it as FTS, that also is another important critical area which has to be looked into from a policy perspective. Current language, rendering of services, managerial, consultancy, technical services, vis-a-vis providing of services in equalization levy 2.0, clearly brings out that when we are talking of FTS 917, the standardized services may still not fall within the meaning of 917 technical consultancy, rendering of technical consultancy and managerial services. So that aspect also now clearly brings out from these high courts decisions, which we have seen, whether GoDaddy's decisions or the earlier decisions of Clifford, earlier decision also of relaxed, both the high courts decisions bring out this fact, which has to be very clear. And there are other decisions also coming in line, in the same line and same viewpoint. So that also has to be taken care of. So with this, I finish my discussion on the 3 case laws, and we can, Vinay, based on what questions you have or other speakers have, we also can take the views of SP Singh sir, because he is very well, he is connected with the GoDaddy's decision also, and his views on these 3 cases also can be very, will be very helpful for all of us.
Thank you, sir. First of all, I should compliment you, sir, for you did not disappoint SP Singh, sir, when you mentioned that you take up every topic in a very meticulous and elaborate manner. So, which is why I should say that we see absolutely no questions, at least till now. So, possibly every doubt in your that comes to our mind has already been addressed by you in your presentation. Nevertheless, I would definitely want to take a suggestion and request SP Singh sir to throw some light on these cases. What are his views and perspectives in this regard?
You know, the one fact which everyone has to keep in mind is that for analyzing any transaction and for determining whether the transaction is in the nature of royalty or services, and particularly, I mean, technical services, the first document which is referred to by the authorities is always the agreement. Whether it is the case of the GoDaddy, I mean, if you read the decision of the tribunal, I don't remember how far they have reproduced it, but that's the thing where I had mostly focused my attention while preparing my submission, which was later on, I mean, appreciated by the Honorable High Court. You know, it's the agreement which is very important, and if there is no agreement, then the actions of the parties which are involved become very, very important. If somebody is sent on secondment, or an employee is sent for rendering any services, going back to the first case, it's always some communication or through the email which has to be relied upon. So it is not only it's the case of the Clifford chance where the number of days has been computed. Always go for the primary documents. So the number of days, I mean, apart from their passport, the communication which have been entered into between between Singapore and India would be very, very crucial. So Narendra, I mean, the common string which has run through all the three decisions, my view is the importance of the agreements or understanding between
Yes.
the entity which has provided services and which have received services. And in case of services and the royalties, this becomes very important because, you know, at the end of the day, if you look at the definition of royalty, the most important thing which has to be established by either party, by revenue and by the taxpayer, is that what type of the rights have passed on in the transaction. Are all the rights passed on from one entity to another? Partial rights have passed on, or no right has passed on? Now, in GoDaddy, the most important thing was that one cannot allege uh, uh, that somebody has passed on some right which to start with was not in possession of the transferor. If I don't have the right in any property, I cannot transfer, leave aside whole part or anything.
Correct.
So what I would suggest is, as I mentioned right in the beginning, getting hold of the facts is very important. Read very minor points, I mean, of the facts. Get hold of the primary documents, agreements, understanding, work, I mean, order, or even the invoices become very, very significant when you are determining the nature of the services rendered or any rights which have been passed on. So rest, I mean, so far as taking help of the cases are concerned, I have shared my experience. I'm sure, I mean, you must have learned a lot from Narendra's presentation, but it's very important to understand both, I mean, your own case and the case which you are trying to rely upon. These are my views, Narendra and Vinay.
Yeah, thank you, sir. So,
Thank you
sir
very
has
much, sir.
rightly put out that again the factual analysis, and again these cases also will see how the facts. If you read these decisions, way the councils have brought out the facts, right, is rightly put out by SP Singh sir. So these are very critical that we understand these facts Also, when has sir has put out the factual analysis of our case and how do we documentation, especially the Clifford Chance case, how the documentation has been brought out, each and every day has been analyzed and how it has been documented. That has been very neatly done. So those aspects become very critical in the final decision.
Sir, during this discussion of deliberation on these cases, you have talked about use of access to database, and then we have seen GoDaddy's domain registration, how the department was perceiving it versus how the assessee was trying to argue his case. So you were during the course of the presentation also mentioning about the new technologies that are evolving and the new kind of services that industry is basically availing in cross-border transactions. So in this context, I just wanted to have your opinion on the payments which we make to ChatGPT itself. When we subscribe to the features ChatGPT 4, when we pay a subscription on an ongoing basis, how would you basically classify this? Because many times, at least the way I understand it is, I use those services to find answers to various questions from a large database that is available on the World Wide Web. So in this context, is it that I am again saying it's only an access to some database, because ChatGPT particularly does not own the database in this context. It is basically, it does a scrolling on through the entire World Wide Web and picks up the answers and gives it to you. So is it, am I paying it for that capability of ChatGPT, or is it for the information, collating the information? Where exactly would the tax thing fit in here?
So look at what is the primary thing that you are paying for. We are today paying it for the capability of ChatGPT to generate the answers, right? So I am making a payment for the software as a service. I would look at ChatGPT as a software which is giving a particular service, right? So it is the new name we are talking of generative AI or whatever. So ultimately it's an engine, right? It's a software code which today is able to analyze a huge amount of data and from there able to give an answer. But am I giving the payment for the ChatGPT, or am I giving for the end answer? So I'm not giving a payment for the end answer. I'm giving the payment. The proximate thing is I'm giving the payment for the ChatGPT software itself, because that is how the even the payment structure would work, right? So when I now say that I'm making a payment for that software or that new technology, the question is, where do I fit in this new technology? Can I fit in this new technology in the context of, say, fees for technical services? Can I say, is ChatGPT rendering me a service of managerial technical consultancy services? It is not again rendering any services. There's no human intervention involved in this, right? So, like the I brought out the distinction in my view, like between rendering and providing, right? Providing is a standardized service can be provided. The service of humans can be rendered. The language today supports the view that the standardized services, providing of these standardized services should ideally go into the equalization levy basket and not in the basket of fees for technical services. So whether it can again be right to use a copyright or it is again a right to use a copyrighted article. I'm not really getting any access to the software itself or the source code of software or make a copy of the software. So if my right is only restricted in those cases to get the end result and answer, right? Now there could be other cases where you use that software and create a new tool or something else. Those could be different cases. But if you're looking at plain vanilla use of ChatGPT, where I'm giving the questions and it is coming with an answer, in those cases where it is a subscription-based model, I would feel that the current language would still not cover it, because we also have decisions of software as a service where the view has been taken that it is not taxable, applying engineering analysis decision. And therefore, this will still have to go into the basket of equalization levy and not into the basket of royalty or FTS.
Thank you, sir. Kota sir, is there any questions which or any points which you would like to make?
there is only one point which I would like to highlight.
Yes, sir.
And that is a very old case. I don't remember the name, where it was said that whether the information which is made available to me or available to the user is something which is in the public domain, or have I done any analysis of those, I mean, publicly available data, and then submitted to the user. If in the first case there is no services, in the second case there can be argument that there are services. So it is very important to analyze what has actually happened, and what type of any add-on is there or not. If there is add-on, only then the question of analysis, whether it is a service in the first point, and whether it is in a technical service under the definition of the Income Tax Act 61 first, and then in the concerned DTA second, will arise.
So before we, I don't find any further questions in the chat boxes. But before we conclude, I think Pota sir has some point to make.
No, I don't have any questions, ma. You can conclude. If no other questions are there, you can conclude.
Yeah.
Okay.
May I request Priya ma'am if she has any questions or any points to make?
No, I don't have any points to make. I found the session very interesting.
Thank you.
Thank you again from our Tax committee for giving me this opportunity. Thank you, SP Singh sir, for your guidance, and thank you Institute for organizing this on a regular basis, knowledge emanating series, and it's really helpful. And thank you one and all the participants also. Thank you, Vinay.
Thank you.
Thank you. So before I formally conclude, I would like to just propose the formal vote of thanks before we conclude the session. So I should thank you, Narendra sir. I must really confess once again that you have never disappointed us. Every time I hear you, I always have this eagerness to hear you more and more, and I clearly await when I will hear you the next time again. So you take up the sessions in a very meticulous and elaborate manner, and the value that is passed on to the audience is immense. And that we can just witness it in the fact that there are no questions that anybody even has to pose before you. Thank you very much for all the effort that you have put in to make this session truly interesting. So I would also like to thank all our participants here for their patience and participation too, which is actually in a way enriching the session. Of course, we would have loved to hear more questions from the audience, but in this case, I think everything was very clear. So we don't see any questions. Lastly, I would like to express my sincere thanks to Sir Shri Piyush Ji, Shri Kota Srinivas Ji, and Shri SP Singh Ji for the entire Direct Taxes Committee team, and for conceiving this entire program, which is basically, it's not only conducted in a very professional manner, but it is also giving a lot of value to the audience here. Thank you very much, the Direct Taxes Committee, once again. So lastly, I thank you all for this wonderful opportunity to give me this chance to moderate this session. It has been a truly learning experience for me. Thank you very much.
Thank you. Thank you. God bless.